You can see that it's moved down with 5 waves almost. You know, we've got 1, 2, 3, 4, and 5, which allows us to draw in a new trend, which obviously gives us a lot less time than the one at the high. Obviously, the one at the high is the trend until we break it. Makes it more significant. Obviously, it's not in any urgent risk of breaking, but it's still on the table to break today. Yeah, but basically yesterday we started the day in the red zone, green zone, red zone, green zone. When we hit that, we made an expanding wedge where we had frequent lower lows until the trends broke in phase B. Phase B took a long time and it was brutal and slow, killed the ATR. That's the point of the day where the ATR started to dwindle. But what's funny is that was 135 and it's only 11 now. And we're at the same point in the process. And you know, that process, as difficult as it was to be long in, it ended breaking the red yellow line. Breaking by going up twice as much as it ever went down beneath that red yellow line. So what it says is maybe we do this distance beyond that red yellow line just like we have yesterday. Now the irony is it wasn't just that distance. It was like a little bit of a grind past it. I'll show you. You know, it was everything that we did here was also this distance, I suppose, from this trend. When we broke it, it went past that high. It doubled it, but went past it. You know, so it not only doubled every single low it ever did off that red yellow line. When we broke it, it was worth more than twice as much as everything that we ever did beneath that red yellow line. And that was off of like 50 lows, you know? And past the first low that we made of the day, how many lows past this low did we make? You know, because if we're here, then if we do the exact same thing as yesterday, we've got this one, this one, this one, that's pretty significant. And then finally that one. If it does all of it again to break that trend, which I don't think it will do all of it again, but some of it at least, you know, I mean, none of it is asking a lot. But some of it, I'm like, okay, I could do some of it for sure. But how much space do we have? Do we have as much space to do all of it? You know, I don't think so. Because if you think about how big phase A was when we first started, like this N right here, we can all see that, right? How many of those N's did it take to finish? And here, we couldn't even do 3 without breaking the trend. So it has considerably less space to do the exact same thing. Yet the result of breaking the red yellow line could be the same. I think it will be the same. To double everything we've done below it. And where will we find ourselves? The VWAP when we do that. Basically, the VWAP. And that's, as a visual example, up here. Inside of that range. 471 points. Getting on top of this is a ticket back down to it. And what if it takes this much time? I'm curious about that. When we make extremes that are related to each other, we like to take roughly the same amount of time. I'm also interested in the other 2 times. Remember that this is where the VWAP begins. You see the VWAP on there, that white line? That's that 500 points up VWAP. You know, that I'm very confident that we will find ourselves at. Which is a level that isn't particularly high itself. Even though it's 500 points away, it'll still be very centralized in an area that we've been in for a long time. You know how I placed the VWAP at the beginning of this range. When we first used this range, it encompasses all of the volume we've ever done since we started this range right here that we're choosing to use right now. Who else do you think knows about that VWAP? The institutions that built this range. I find that very profound, and likely that they are very aware of every single trend that needs to break to get us back to that VWAP. And sure, it's difficult because it makes people try many times. It might seem like it's taking it from you and this and that. I'm like, that's just what it takes. It takes all of those times. So if you're there through the whole time, I mean, and it takes 50 lows, you know, what are you going to do? Just try not to trade to the last 50 low? You know, I mean, at the end of the day, it's about dragging your stop into profit. It's about taking short-term targets. It's about making sure that you're safe to be exposed to the break of the red yellow line so you can get the 500 points by the end of it. That's the idea. And when we find ourselves at that level, it'll be a test of patience again, at any VWAP that we go back to, we can stand a good chance of needing to chop at it, especially if the red-yellow line breaks incredibly well and we find ourselves running and running and running all the way up to the VWAP and we find ourselves exhausted when we get there. We'll have to chill, and that's fine. That's absolutely fine. We've been so interested in the bottom of the red zone, but what about the top of it? You know, that's the next point that I find of most interest. The 61, you know, you see in this area, there also used to be another gold bar there. Like, are we going to start messing with that? Putting the 61 on top of that? Don't you find it's funny that there's already a 61 gold bar where there is a 61 now? Somebody's playing the game and they use 61s and understand where they're supposed to be. They place them perfectly in areas that they've already been used in the past. And only if we look and remember them and respect them from before, then we'll be able to see that it's doing that. I think when we leave this range, it's going to be so that we can move specifically into another one of these other ranges that we've been using, which I believe it's going to be the one above. So this distance right here that we make between the tests of the red zone, I noticed that it roughly takes this much time away from that line before returning back to it. What does it tell us when we're not at that line for that time? Are we done with it? Are we done with this node and this range altogether? The need to be here, you know, and everything finished. Because that's how much time we spend away from that line, as far as I can see. And how much space can we move away from it? What's an appropriate distance before coming back to it? You know, we've made a few of them. It's kind of difficult to say. Like, this used to be the appropriate range. This was the appropriate range. Then it got shortened to this, which was really appropriate. You know, are we going to do one of those guys on the other side of the range? Well, ironically, there's not enough time left within this space to do that. I mean, I guess you could make it look funny, but I don't think any stops are safe above that level. Now we're at the 61, and testing that level could become part of our future. Most of the time, when we get back to the 61s, they've been struggling if they're inside of a gold bar today. And today, we can see that it's managed to make it roughly 2 distances away from where the previous high was, in order to make 3 consecutive lows and 3 consecutive highs. So, like, it starts out with these 2, that one, this one, that one, and that one. That's what we chose to do today, which is, you know, remarkably similar to what we did yesterday. Yesterday, this level caused its 61% retracement though, so, you know, getting to the 3rd high was a pretty significant down decline from that. It's good to make sure that any positions are safe. If we do the rest of yesterday, we're going to be in for a lot of chop. The green zone will be seen countless times. When there's a chance that we could get a drawback on a position, hedging comes to mind, of course, but definitely trimming and protecting the trade above all. And the most likely return point, as we've seen, has been that POC. Any hedges that do get there want to be made safe at that point too, but it's not a necessity. What I'd say the necessity is being exposed to the break of the red-yellow line to get to the VWAP above. And whatever they throw in this range here, whether it's a 61% retracement or it's a clean move through the red-yellow line, the VWAP above is the most attractive spot to end cycle sequence. Many people will look at it like a head and shoulders in a moment, because it's kind of setting up with a left shoulder, head, right shoulder. This pattern exists right now, but any hedges that have been taken from the red zone definitely want to be made safe. This is the point where we were able to go from the preliminary support, selling climax, automatic rally, to the secondary test, and then when we tried to get up off of the secondary test, it couldn't make it, and that was from here. It basically dumped from there into the ST and phase B beyond phase A. But the same 5 moves that we've been getting here happened, just we didn't manage to make that new high, where we were able to do that on the shorter term one here. So instead of being able to go down like this and then just hit that level and go down, we've managed to make it all the way up and then back to here. Or if I just scroll up a tiny bit, I can see that we were using the ST as a pretty decent rally point. Yeah, we might find ourselves in a very similar situation to what we were doing here. Like where we are right now in that sequence is here. Like the ST in phase B didn't always make a new extreme low. Like if I was to put the letters in there, this would be the PS. This one is the 31st. Which is strange to me because, you know, this is how they've been making this point seem like it is a significant movement. But what's ironic is we're still like move for move in the ST and phase B. It's just smaller than usual. It didn't make the move it should, but it's got the same amount of trends required to get to the ST and phase B. It's like saying this is still a 5-wave move, even though it didn't make it like this. There's still 5 waves. And I mean, here, there's still required 5 waves to make it down to the ST in phase B, because that's the 5th one. And in here, the ST in phase B is the 5th one. So we've managed to come up already off of the ST in phase B. Wyckoff in phase B, I've been able to literally draw something wrong with phase B almost every single time we do it. So it can either be stretching out the ST in phase B or not doing enough of it. This time it's not doing enough ST in phase B. No spike on the bottom. It's not technically that correct movement. It needs to make a new spike on the bottom to be the ST in phase B. It would still be different because this chop is in the way, but it's a movement that threatens to make the best price of the pattern. Where on the 27th, we really proved that the ST in phase B could be the low, could be the best price, and we don't have to make the spring or spike past it. Now, many times we've actually went and made this spike past it in the future, which does make the ST in phase B get smoked. But not always do we have to do that. Sometimes catching the ST in phase B gives you exposure to the entire trend break and exposure to the entire movement. So, you know, talk about times to turn up the aggression. The ST in phase B is one of them, as well as the spike in phase C. You know, getting exposure to those points means getting exposure to the end of the Wyckoff. Debatable, like how are we still in that one? You know, are we making the ST in phase B or the spring, you know? The ST in phase B, its job is to bring it up to the other side of the range, like that, to bring it up to here. So like this movement already happened. And here we are falling off of it like we would be here. So that's why here starts to become like, are we right there? Right on the cusp of phase C in both of the schematics? Because we have enough waves in here. Like after we did 5, we could go 6, 7, right? Which, you know, we can do inside of the schematic. We could go 6 and then pull back to 7. That's where we are right now in the schematic, which is hindering on, hey, do we make a spike to jab beneath the lows of all the consolidations right before we break the trend? And like, remember, this is what I was talking about 10 minutes ago. Instead of making phase B, we've been making expanding wedges to shake people off. Many of the nodes reverse off of rounding everyone up, plumping up the channel, full of volume, then just make a quick small spike past the node to get the clump of stop losses, and then run to break the downtrend. So look at this environment that I've got drawn in this previous day over here, where it literally rounds everyone up. Oh, this is where you're likely to trade. You know, if you were blindfolded and, you know, you didn't know anything about where the market was going, you're probably going to have that time to trade. And then finally, you know, anybody that needs to insist on waiting before it starts breaking the trend to start chasing it, all those people get rounded up as well, you know, and then we go for everyone's stop, and then it breaks the trend properly after all that time and all that waiting for all those people.